How's it going, everybody? Happy Wednesday and welcome to the Hot Corner Insider Strategy Session. We do this every Wednesday. I've been gone for 3.5 weeks. So glad to be back doing the morning show, back doing this every week. We'll be back with our full regular schedule next week. Sean and I did miss the Flow show this week, which will be on Mondays going forward, and PTPA, pardon the price action. JC and I missed this week also, which will be on Tuesdays going forward. Let's get the disclaimer out of the way. Nothing we discuss here today constitutes any solicitation to buy or sell securities. This is solely for informational purposes, not to be construed as investment advice. So a lot's changed, and we're going to be quick today. Guys, I'm still jet lagged, and I'm heading back to the airport in about an hour and a half here. I'm going to be spending the next 2 days with JC. We get together, a couple times a year, ideally, to just kind of discuss strategy, brainstorm things, and just hang out, right? get to spend a little bit of time together. I think we will hit the golf course tomorrow also, which I'm excited about. But I'll be doing the morning show from my hotel room. And I think I'll have far better Wi-Fi and internet capabilities than we had over in Asia. We did try to get on video like a couple times last month, and pretty much all of them were tainted by bad Wi-Fi. So we'll see what tomorrow brings. But the second half of the year got started while I was away. And boy has the second half so far looked a lot different from the first half. And I think this bubble chart here does a beautiful job at illustrating exactly what I'm talking about, right? We have the first half performers up top here, running up the y-axis. You see tech, discretionary as the clear leaders. And then the second half, right, along the x-axis, you see really energy running away from everybody else. And then even before something like tech or discretionary, you have materials and financials, right? So I understand that we're only measuring the performance of the last month and a day here along the x-axis, but it certainly stands out that it's energy, financials, and materials in that order. These are your classic value or cyclical sectors, right? As opposed to something like technology and discretionary and communications here, which are your classic growth sectors. So, question we're all asking ourselves internally, and a lot of people are asking it publicly, and it's becoming quite the narrative right now, is that, okay, it's time for some change in leadership or some rotation in leadership where growth and tech, what have been the strongest stocks or strongest groups so far in 2023, maybe take a breather, undergo some corrective action, and then groups like energy, financials, materials, even industrials kind of enjoy some healthy rotation, right? And kind of take the reins of leadership going into the third and fourth quarter. I think that there's a lot of evidence suggesting that we very well may be headed in that direction, but we still need to see it. And we're going to talk about some of that stuff right now. So just to be overwhelmingly clear, this is the performance chart showing all equal weight sector indexes from July until now. So just starting in the second half of the year here. Energy, almost 10%. Financials, second, 6%. Materials, third, 4.5%. Communications, which is very growth heavy. Communications is tech. Down at the bottom, up 0.5%. Still, a takeaway here is that everything's positive, right? So when we talk about this shift in leadership, it doesn't mean tech stocks have to go down, maybe sideways. Maybe it takes them a while to digest the overhead supply at the index level. Something like XLK or the NASDAQ or semiconductors, right at those former highs. They don't have to go down, right? We're just talking about outperforming and underperforming here. So here's tech on an absolute basis. This is exactly what I'm talking about, running right into those early 2022 highs. So just like the trend kind of stopped and reversed at this level a year and a half ago, well, now we're back there. Do we stop and reverse, or do we simply pause, chop around, maybe digest some of the overhead supply here, and then eventually resume higher? I think it's definitely the latter, right? I'm not looking for a move like we had off of this 2022 peak, right? I'm not looking for some massive bear market here. But I do think it's a question of how long, right? This is a clear resistance level. It's already acting as resistance in a way, right? Stopped and paused there a few months ago, kind of took another shot at it, overshot it, now kind of coiling. Some of these tech charts looked like they were resolving higher from like bullish continuation patterns, these little coils. But today, especially if I look at something like equal weight technology, and sorry about that, Gene, be just fine here. If I look at like equal weight technology, so RSPT, today, especially if we get any sort of follow through on today's downside, you could draw some very, very short-term flags here, or short-term continuation patterns. And depending on the group, some of them are resolving lower, or at least look to be resolving lower today. So something we have to monitor. Then the question kind of becomes, okay, if these little coils here and things like technology and semiconductors do resolve lower, okay, so then we would expect or have to anticipate some downside follow through. So some sort of a leg lower. And then the question becomes, are these massive reversal patterns, right? These trend reversals that we've been talking about for so long, are they coming undone on this corrective action? So here's a good example, right? I'd be looking at something like Hack, where this has all of the classic characteristics of a rounding bottom or a reversal pattern, right? Looks to be resolving higher. You know, we could define our risk very clearly at these August highs from last year. Momentum's in the bullish regime. Now, if we get some corrective action in growth or technology, question we'll be asking ourselves is, how many of these bases or these reversal patterns that looked to be completed to the upside are coming undone and failing, right? So that would be, you know, Hack below 52 would then fit that bill. And we'll be asking ourselves, how many reversal patterns that we thought completed, telling us that the path of least resistance is now higher for a group, how many of them fail, and it becomes a case that the path of least resistance is not higher like we thought it was. Instead, we're still stuck in a sideways range. So that's kind of what we'll be looking at, I think, in the coming weeks. And another thing to keep in mind here is like the relative trends, not just the absolute trends, like we showed something like semiconductors or tech, running into, you know, very clear resistance, natural polarity zone. Relative trends look the same way. So this is NASDAQ versus Dow, NASDAQ versus S&P 500, NASDAQ versus small caps in the lower pane, all of them running into their dot-com bubble highs, and their highs from, I think this was late 2020, early 2021 in some cases. Really clear levels here, logical levels of resistance, natural levels to see supply enter the market and to see these relative trends kind of pause or mean revert a little bit. Now, if tech and growth and the leaders are to take a breather here, take a little bit of a break, experience some sideways price action, do the laggards pick up the slack? When I look at the price structure in something like the Russell 2000 small cap index, this is IWM in the upper pane here, I think odds are pretty good, right? Been working on this rounding bottom pattern for over a year now. Been at this level before, right? Multiple tests. We're right there. Sure, we're pulling back a little bit today. Let me check IWM here. Yeah, you know, down 1 1/3% today. Not great, but look, the action has been very constructive. We have a long-term moving average here, kind of flattening out, curling higher. The relative trend, this is Russell 2000 versus S&P 500, couldn't be at a more logical level to experience some, you know, counter trend action here, right? So this would This would suggest this green arrow here in the lower pane would suggest higher prices for this ratio, which means outperformance from the Russell 2000. So do we get some sort of a base breakout here in the Russell 2000 where we start moving higher as the Russell is on its way to looking like, something more like semiconductors or tech, right? Like this base in tech, this looked like the Russell back here around 150, right? Now tech has gone on to hit our target, right? The Russell is still right at its base breakout level. I'd rather be getting into a base that's just now resolving higher, therefore has more legs than a base that's already resolved higher and is running into a logical level of overhead supply. Again, not to say that the trade in tech is over. It's just not, from a level and timing perspective, probably isn't at the best spot. So all things we're thinking about. Another option we have to remain open to, in my opinion, is, especially considering the outsized returns from the best stocks and indexes so far this year, look at the dollar, right? We got this nice breakdown, what looked like a nice breakdown. Momentum got oversold, not shown here. And now we're just ripping higher. Classic little whipsaw at this, key level at these pivot lows. We're above this 101. Yeah, call it 101. 101 level. Risk is to the upside over the near term for the dollar. Does the dollar keep ripping higher? And as tech corrects, or as the leaders correct, everything corrects, right? So something like this base in the Russell fails here, falls back into its range. I think a lot of that, I think the answer to that question will have a lot to do with what this chart looks like throughout the rest of Q3 and into Q4, right? Does the dollar roll over here or stay range bound? Or do we get some sort of a situation where it just heads straight back higher to these pivot highs, the upper bounds of this range? If that's going to be the case and the dollar's heading back to 104, 105 or higher, maybe nothing's working. Maybe everything's correcting into the back half of the year. So we'll see. Let's remain open to these, different possibilities. In terms of setups, I've been away for a while. I know that JC's been taking care of this, and Alfonso, as always. I'm going to focus on some new ones today. Just, these are some of the best looking charts that we have in our universe right now. Here's Woodward, WWD. This is in the aerospace and defense industry. We had a Form 4 buyer a little bit less than a year ago in size, 1.6 million. This was the CEO and president. Look, the stock is just now breaking out. So 129, you got a pretty clean level at these former highs here. We're above 129, like it long to 180. And again, it's that industrial space. It's that cyclical value trade. I think it makes a lot of sense. Guidewire Software. Form 4 buyer last summer, Michael Keller. Almost $250,000. You have a nice base here, right? Some will call this an inverted head and shoulders. That works for me. If we're above 83, first target 102. Nice little 25% trade, a little bit more. Commercial metals company. We were so patient with this one. Just a monster base. Goes all the way back to the pre-financial crisis highs. Got the breakout. We got a little bit of chop at the breakout level. We remain patient. Now our first target's hit. Been hit twice now. Call it 57, 58. Look, if you've been in this one for a while, because I know we've been talking about it for years now, and you rode it from 38 to 58, I know it wasn't easy with the potential shakeouts happening and the, just barely hitting our profit target, then a big pullback, and now we're back there. If you want to exit here at 58, hey, look, you made $20 on a cost basis of 38, made more than 50%. That was a good trade. Fine, feed the ducks. If you're itching to get into commercial metals company and get some exposure to this more cyclical value trade, I think this is a very good option. It does give you that exposure. I think commodity stocks are set for, some rotational tailwinds. You can redefine your risk there or define your risk at 58 and be long to about 88, 89, 90. It's been a good name though. And, we love buying those structural base breakouts. Immunocore Holdings, IMCR. not the first time you will be hearing about this in our Hot Corner videos or posts. Baker Bros. This is Baker Bros' big bet right now. So look, that's enough for me. Not only is it their big bet, one of their biggest positions, if not the biggest. No, I don't think it's the biggest. I think Beijing still is. But IMCR, not only does Baker Bros love it, but the chart looks great. Technicians love it. If we're above 62, got to be long. I think you can get confirmation above these pivot highs here. See? So confirmation above like 66. We're there right now. So this one is very actionable with a target of about 89.90. Rig, I really like the oil field service names right now. Look at Rig versus the broader market down here. Really nice reversal pattern, similar to the absolute trend. Definitely not making the bet that the absolute trend and relative trend are going to look different, right? So absolute trend already leading the way higher, breaking out from this reversal pattern. I think the relative trend confirms that very soon. Want to see that confirmation, but we're above this 775, 8 level, target at 14. That's a nice trade with some significant upside. Same theme here, OII, another, offshore equipment and services stock. We're above 2150. You got the year-to-date highs there and some highs from way back, and it looks like 2019. So 2150, that's a big level. We're above there, more than 50% back to 34. I bought Schlumberger SLB just because it's a very liquid vehicle, and I want to put some risk on via the options market. SLB looks great, right? So a lot of these E&S names, these equipment and services names, look really nice right now. Fiserv, FI, look, pre-COVID highs, 2021 highs, knocking back on the door. It looks like we're breaking out. Quick little retest here. As long as we're above 125, this is a really clean breakout after going sideways and consolidating for several years. So 125 is our risk level. 157 is our profit target. VA partners, that's Value Act, right? So big institution in this one. These guys are not the worst to follow into trades. Very good track record on Wall Street for Value Act. Worthington Industries, WOR, I believe. Is this chemicals? Chemicals, materials. Steel, materials name. So 1.7% dividend. Market cap that's heading towards about 4 billion. So it's in the mid cap space, decent yield, commodity stock. Look at this beautiful base, right? What a clean level to define our risk at. So call it $75. Just zooming out on the chart here. Yeah, this one's clean. And look, it's already, just about doubled off of its lows from last fall. So it's been a leader. Now it's giving us a very clear level to define our risk against. And, a long-term pattern that if it does break out and hold above the 75 level, it would indicate or suggest that a new leg up is underway. That probably brings us to our price target around $98. So if we're above 75, I like what this director here at Worthington, David Blom, likes. 75, let's own Worthington with a target back towards 98. One more. SherwinWilliams. If you zoom out on the chart of SherwinWilliams, boy, has it been a bull market for paint for a long time. This is a secular leader. Just double checking that. Oh, yeah. SherwinWilliams has been an outperformer in its group pretty much forever now. Has been going sideways on a relative basis for, it's about 2019, early 2020. I think once this reversal pattern is completed, right, the path of least resistance is higher. We enter a new markup phase. That outperformance or that relative strength reasserts itself. And if you're banking on or looking for some sort of a rotation into a sector like materials, sometimes the best or safest or simplest way to express that thesis is with some of the biggest names. So we're looking at stocks like Dow, Sherwin-Williams, PPG, these big materials names, particularly the ones with most liquid markets. I think some of them are ADRs like Lind. Some of the biggest names are ADRs, don't have the most liquid options markets. But point being, SherwinWilliams is a great vehicle to express a bullish thesis on some rotation into materials or some of these more cyclical groups. We're above 283. I think the reversal pattern is completed. And we can, look back to about 354, those old highs for our first target. The chairman and CEO was the Form 4 buyer in this name just back in January. So definitely stands out. Looks like he got a pretty good price back here. He's already very much in the green. Again, I think, this reversal pattern is completed. Path of least resistance is higher. Buy on strength above 283. So that's really it, guys. If you have any questions, shoot us a note. info@allstarcharts.com. And I will be back here, same place, same time next week, talking about more insider filings and some of our favorite charts. So thanks for joining. See you then.